Okay guys, welcome to the FX Street webinar. My name's Ian Coleman. I'm going to be your host for the next 60 minutes. I'm one of the traders and analysts at First Trading. We supply retail, institutional banks with FX analysis and trade recommendations. Okay, today is a particularly good day to review the charts. It's month end, well it was month end yesterday. We've also got most markets closed today. So it's a good time to sort of not sit back, but to look at what's going on in the currency pairs and try and decipher what's going to be happening in the month ahead. So we're going to go through different currency pairs. You can choose which currency pairs we look at. I've got cable started here. The chart package, some of you won't recognise. It's CQG. I'll run you through my settings first. These are the settings that I use. These are my personal charts. The blue line is a 15 EMA. The red line is a 62 EMA. Okay, I've got an Ishimoku cloud in the background, and I've got an RSI. I try not to overload the charts with too much information. Obviously, the Ishimoku cloud can confuse a few people. We will look to cloud formations to see whether or not we've got breaks, whether or not they're correct breaks, i.e. all the Zen lines and lagging lines, etc., are in order. We're going to review all the way down from monthly charts all the way down into shorter time frames to try and get some trade ideas. The monthly charts, you might think that they're not worth reviewing as the time frame is too wide. Okay, we get a bias off these larger time frames, and then we break it down into shorter time frames to try and get trade ideas. There are monthly signals that are well worth noting. Okay, they're called AMRs, which is Acute Monthly Reversal candles. Okay, so that's one of the reasons why it's obviously a good idea to have a look at everything today. Okay, on here also I've got a few little tools which I think are unique to CQG. You'll see on some of the chart formations you'll get this yellow background. Okay, and there'll be a small note at the bottom of them. They basically alert me to different chart formations, engulfing, insider armies, evening stars, etc. Okay, and I've also got a nice tricky little tool in here, which is an Elliott wave forecaster. I'm not fanatical about Elliott wave. But what I am fanatical about is fib levels. So I do like to look at Elliott wave. I don't always agree with the wave counts that this produces. To be honest with you, I don't know if it's automated or not. But it is interesting to look at. Obviously here, it's dictating that this was wave 1, 2, aggressive wave 3, lower, and then this being wave 4, and then we should be in for an aggressive move down in 5 towards this sort of level 130. I don't know whether or not I'm in agreement with that at the moment. This is, without a shadow of a doubt, a consolidation period, but it's a very large consolidation period. If we just note here, we put our trend channels on. We've got a consolidating triangle formation. Okay, because of fib levels, I'd have a tendency to think that the move down was so aggressive that this was 1, this was 2, 3 and 4 are in here somewhere, okay, in shorter time frames, and then because it was so aggressive it extended to 425, and this is the move back up, the corrective triangle formation. Okay, I don't believe that this move back up is 4. I think 5 is completed. So just going back to what we can see at the moment. Okay, we had an AMR, an acute monthly reversal candle, just here. Okay, at the low in January this year. Okay, we had an engulfing red candle, so an acute monthly reversal candle. You can see that dips have been bought, and for the last 4 months we've produced a positive bias. Resistance levels, we've got 164.32 cloud. I've also got my EMA, which comes in here around the same level, and we've also got this trend of lower weekly highs. So we've got congestion zone up here, okay, around sort of 164, 165 area, which should be noted on this monthly chart formation. The RSI, I should mention, is a 15 RSI. Okay, I'm not particularly bothered about oversold and overbought territories. What I'm looking for is it to give me a bias, especially in shorter time frames, not really on the monthly. But if it's tracking around the 50 level, then it's telling me that we're in a consolidation period. Okay, so the bias off the monthly chart at the moment is definitely to the upside. One thing I will explain about the EMAs, the reason why the 15 and 62 EMAs, 62 EMAs is close to 61.8% as I can get. Okay, the 15 EMA is the 62 EMA in a shorter time frame. So as I break it down from a monthly to a weekly, that's obviously a quarter. So we've got a quarter of 62, near enough 15. Okay, and we keep on doing that all the way through the time frames of 4 hourly to hourly charts, from hourly charts to 15-minute charts, etc. And you will note as we start going through the different currency pairs that these EMAs act as moving support and resistance. Okay, I don't believe in trading crossovers because you've missed the move. What I'm looking for is areas of support and resistance around these EMAs. You can notice here at the top we had an inside hammer, okay, at the 62. So a decent area of resistance, moved down to the 15 and moved down to the cloud. So we're noting in much shorter time frames, we're noting all these areas of support and resistance to try and squeeze our analysis, if you like. Okay. Please do feel free to ask any questions during the webinar today. I do have a tendency, especially after a severe lack of sleep, I've only had sort of 3 hours kick last night. Can everybody else hear me okay? Mike's just saying that you can't hear me at the moment, but my microphone's reading that you can. Okay. So then we're breaking it down, okay, into shorter time frames. Is there any reason why we should have a reversal around this level? Now, I said I wasn't fanatical about Elliott wave, but one thing that we have got, which I do note, is wave counts. Okay, so we had a decent wave count here, a 5-wave count. It would be invalidated as far as Elliott wave is concerned because 3-4 broke over 1-2. So we've got a 5-wave count and we've got a 3-wave move up at the moment. And again, you can see on these weekly charts how the 50 held, okay, as support. It moved down, and this week here, the week 9th of March, we had an insider army candle, okay. Now, the most important candle formations for me are engulfing, be it bullish or bearish, and insider army candles. Okay, bearish or bullish engulfing patterns basically show a complete reversal of investor sentiment. So the market's moving lower, it then makes a new low, but then the bears lose control and the bulls take control, and they completely reverse that initial move lower. Okay, so it's a complete change in investor sentiment. I'm not a great believer in just blindly buying reversal patterns. I want there to be a reason why there's a reversal pattern at that level that I'm looking at. Okay, and I look for insider armies. So an insider army candle, which you can see here off the support level? I can, and I can keep on putting it back on. Somebody's just asked if I remove the cloud to make it a little bit easier to look at. I'll also remove these candle formations, and then I'll put them back on when I see breaks and stuff like that. I don't find them that confusing, to be honest. What I'm looking for in the cloud is support and resistance, how thick or heavy that cloud cover is, or the cloud base is. Okay, and obviously when we break through the cloud, whether or not it is a correct breakout. And in euro dollar at the moment, even though we've broken the daily cloud to the upside, it's an incorrect breakout. And I will show that one. So here, insider army, okay, holds this support level, holds the 50, breaks the high, and obviously the market has continued to the upside. Okay, it is an aggressive push. Good retracements. Okay, we're in between 61.8 and 78.6, so that doesn't really give us many clues at the moment. Let's get rid of that one. Fib extensions. Okay, through 127, not reached 161.8%. So there's no reason, as far as fibs are concerned, that this upward bias should stop. Okay, and we break it down again into a daily. Okay, we've had an aggressive move up here. Okay, off these support levels again, 50 holding quite well, and has pushed higher off these support levels. This little indicator is saying that this should be a fifth wave completion. Okay, what we do have is, as far as I can see, is a three wave pattern. Okay, so we've got a move up in one, we've got a move down in two, and then another wave move up in three, and those patterns can also be seen in three waves. Okay, so we've got 1, 2, 3 of 1, 1, 2, 3 of 2, 1, 2, 3 of 3. Now, to see whether or not the extension has been complete or it's a perfect ABCD completion, okay, we need to start plotting our highs and lows. So we take the low. Unfortunately, this chart package doesn't mirror the line. There are some chart packages out there that do. So you take the low, 152.33. I have to do this one manual. Okay, take the high, 159.91. So take that away, 159.91. So we've got to move from A to B, okay, 758 ticks. Okay, we then take the move from what we think could be C to D, okay, and see whether or not this lines up with our 758 tick count, okay. So again, take the low from what I believe will be C. So the low is 156.03 plus 758. 163.61, and the high trade at the moment is 163.02. So we're getting a move up, but we're definitely getting towards what looks to be the top of an ABCD correction. My advice here would be to I can give advice because it's FSA regulated, but I'm not telling you to take a trade, which I also have to, because of the way that FS Street is structured, I can't tell you to sell and buy. But the bias for me is still to the upside, but it's very limited. The risk reward here is not great. Okay. Break it down into 240. do we have any reasons to believe that this move higher could be finished? Okay, this CD wave. Now, ABCD corrections are made up of not only 3-wave patterns, but also they can be 5-wave patterns. So you can have 3-3-5, you can have 5-3-5, you can have 5-3-3. So again, we want to look at, and I do apologise if I'm losing anybody at the moment. Again, we want to look at extensions. Okay, so we had choppy move up, which is pretty normal in a first wave, okay, off this low, which was on the 5th. Okay, moved down, didn't break the low. We had a 4-hour engulfing candle formation, and again, it's a decent engulfing candle formation because it's broken. It's not only engulfed the body, it's engulfed the whole price action, okay, of the previous 4 hours. It then comes back to retest, and then it moves higher. And we can see that we've just got these continuation patterns. So the market keeps on coming lower, or trying to come lower, inside a Rami, small pullback, and a large bearish engulfing candle, then small pullback, another large bearish engulfing candle, and we can see this pattern for trading all the way up. 61.8%, it overextends. If we get an overextension of 161.8%, then it will normally mean, it won't mean that we should project a higher level of 261.8, but it will normally mean that 261.8 would be short. It hasn't been in this case, but you can see we then moved back down, okay, to the support level, another engulfing candle formation, 434. I don't believe that counts correct. I believe it's here, 3 to 4, okay, and then a choppy move up in this 5th wave. So we've got 1, 2, 3, 4, 5, and then we can start again breaking it down into shorter time frames. So wrong tool. So I try to keep a full arsenal in my bag, if you like, in my FX analysis bag. But I'm also trying not to overcomplicate things. But we can all trade with the trend. The art is to know when to get out, okay, and when we get a decent reversal formation. So in this 5th wave up here, again, we've got some subwaves. Again, in a 5th wave, they can be extremely choppy. They can overlap each other. And that, again, is why I'm not fanatical about Elliott wave. But we've got, in this 5th wave, 1, 2, 3, 4, 5. Now, we're massively overstretched up at this level. We've got a pin bar up near the high. And the market has moved down. 60 minutes. Okay, let's get rid of the fib. Okay, and then we've got, it wasn't the best reversal candle. As I said, I'm looking for a complete engulfing of price action around this level. But then we've had a decent move down. I do think we're going to base here, or put in a low around this level. It could overextend slightly, but I don't believe it will. And then I think we're just going to move back up small towards sort of 162.50, 162. I don't think it'll get as high as 75, 162.65. And then we're looking to fib levels again. Excuse me. So around this sort of area, okay, around 162.60 for shorting opportunities. So what side of Skype? I'm sure what side off now. Lost my track of thought. So yes, pullback short. I think this ABCD formation is complete. I think we may, as I said, get a slight move up. I am long in small. I'm allowed to confess my own trades. Around about this level actually, 162.12. And I'm looking for a short-term move up. What did we have this morning that indicates that the price action might be stalling around the low? Anybody? And it's not a test. I just want to see whether or not anybody's actually taking any notice of what I'm saying. We have an inside bar. So it's an inside Arami bar. So we get this move down, we then get an inside Arami bar. This is still an inside bar, so we're still inside this 9 o'clock candle at the moment. But if we take it even to shorter time frames, the market has made a higher low, and now she's trying to push up. Okay, until she breaks this level here, what's the high? 162.23. We haven't really got confirmation of a correction higher, and at the moment, that's all I do think it is. It's going to be a correction higher, and then a push back down. Anybody heard of the 9 count? We normally, in technical analysis, we normally won't have any more than 9 positive or 9 negative candles. What we had here was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it did overshoot by 1 candle. If we look down to this side, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, and then a small correction. So my short-term bias is to try to start building short positions around these highs. And then I think she's going to move back down. Areas of support, get it off. Okay, going back to Ishimoku. Okay, area of support. Our first area is going to come in around this sort of level by the time she gets down here, 158, sort of 75. So again, sort of quite a decent risk-reward trade for a medium-term trade. Not particularly great for a scalp. But if we note here as well, and this is one of the reasons why we look to Ishii, okay, is that it does hold well as support and resistance. And I'm actually going to drop, modify, display. I'm just going to do this for this one. That one. Okay, so these are the Zen lines, and I know this will freak a few people out, and it's not as complicated as it looks. As I normally say to most guys in the webinar, no, I haven't got Tom DeMark on. As I say to most traders, if you don't like the look of Ishimoku, then put it on a separate chart, okay, and just keep on flicking through and back to it to have a look to see where those support and resistance levels are. Okay, you will note that when she broke up here, okay, when she did break out of the high, the Zen lines were in order. Okay, this is our. Oh, okay, Mike. So I did enroll to DeMark a couple of months ago and had a trial. I think it's very good. It's just very expensive. It was about £385 a month. I think I had to pay for DeMark for 1 month bash, if you like. I don't think that my personal way of trading needs it, because it didn't really add value for me. If you've got something that adds value, then it's obviously worth money. But if it doesn't add value, then it's probably not. So we get a decent breakout. So the Zen lines are in order. We go back 26. I can see that it's above price action. So I know it's a good breakout. And then here, let's just drop Ishii off again. Okay. And then we're here, we can see these areas. This was an area, this was an area, and this was an area where the cloud support on this daily chart works extremely well. We get inside Arami, we get a break to the upside. We get an inside bar again, another insider army indecision, breaks to the upside, and then we get an outside bar here. So you shouldn't really ignore Ishimoku, especially if you get a decent breakout. Anybody got any questions about cable before I go on to euro dollar, and then we'll just flick through some others. So on a short-term bear at the moment, I'd say it's probably quite a high-risk trade, but it's also potentially quite a high return. Sorry, I'm short-term bull on my open position, but only as a very short-term trade. I'm then looking to take reversal patterns lower, looking to take hopefully down towards sort of 159 area. Any questions? Does it all make sense? I do for entries, yeah. If I see this, I know it's easy backdating, okay, but say we take this candle here, and the reason I'm going to take it is obviously because it's a low, but it's bounced off a support level, so it's bounced off 50, it's bounced off 62. I then take it down into shorter time frames, okay. And in fact, I'm on a daily now, so I can't do that. I'll take it off an hourly. So if I've got a reversal pattern on an hourly chart or a continuation pattern on an hourly chart, I then look for price action going down into 5 minutes. So I'm then looking for basically how this currency pair is reacting short time frame. So you can see here a very aggressive push up. Okay, it had the chance of making what I was looking at originally, the head and shoulders formation. So I had the chance of just sort of hanging around this channel base or this right shoulder, and then I'd look for bullish patterns to get me up. Okay, so inside bars. Okay, and then but I want a confirmation candle. This isn't the confirmation candle. And I don't fiddle it, I only sort of look to 5 to 10 minutes. So when I've got indecision, okay, I'm then looking to 5 to 10 minutes. So we've got indecision here, and then it's very tight. But this candle here, this 1140 candle, this 10-minute candle, does engulf. You can then potentially, I mean, I only really go down to 5 minutes. You can then look for small pullbacks to entry, so you can maximize your sort of risk reward. So obviously you take it. I don't place my stop below the low. I take the length of my trigger candle, whether or not it's 10 minutes or 15 minutes or 5 minutes. Like I said, I don't really look to 15. So I take the high 162.06. I take the low 161.98. So that's an 8-pip candle. Okay, I'd put the stop at 161.90. So my stop would be here. How do I take consolidation breakouts? Not really. I sort of have a tendency to try and work out where the trend is, where the waves are going to be, what strength of the trend is. If there's any, if I get a reversal pattern, I'm very much price action based, which you know a lot of guys are. But if I get a reversal pattern or an indecision level, I want to be looking at my chart in different time frames to tell me if there's a reason why there should be indecision around here. Okay, so I get this indecision bar. Okay, I then look back. Well, this was an area of resistance. It's now becoming an area of support. So that's one reason. And then I'm flicking it back through time frames. Is there any other support level? 240 is miles away. Notice how we're probably going to form an inside bar here as well on the 240, which shows more indecision. 12 to 2 o'clock on my time frame, so I've got another hour and a half to wait. Daily, again, no support. So the only thing I've really got is this, okay, is this previous high. So it was resistance, it broke out, it now becomes support. And that's another reason really why I'm not looking for this to be a particularly long-term trade. I'm just looking for a correction higher, probably choppy as well today because price action is going to be pretty liquid, I would have thought, and then a move back down. Do you take consolidation breakouts? No. What I find is that pin bar wicks often acts as great support and resistance. Could I be correct? Yes. I used to ask when I was very new in FX, where did you take the trend line from? Do you take it from the high of the chart of the candlestick formations, or do you take it from the close? Because surely the high or the spike is a price rejection, but I always take price action from the spikes because it does show, even though it was rejected that level, it does show that the traders did take it up to that level. When it comes to support and resistance, you can sort of fiddle it a little bit because you can say, well, that was support, so it's still around that area. It's not an exact science. You can't expect it to hit sort of pit perfect. And also, just watch this 15 EMA. This 15 EMA, again, I start digressing a fair bit. 162.23. Okay, 5 minutes. Just reacting again off here. Okay, hopefully this is a channel breakout and a retest on this short time frame, and then to take it up. But if you look, and we'll look again at the end when we come back, just to see how she reacted at 162.23, that 15 EMA, because sometimes we just get a little short-term correction off that, which again can be, if you're looking at chart formations, again can be a nice entry for long trades. And I'm talking short-term here. I'm not talking medium-term or I forecast intraday and longer for currency moves, then use short time frames to try and catch them. Our analytical reports are aimed at giving our clients a bias and entry and exit levels, but they're also aimed at giving you like an overall direction call. Cable is often wild. I'm just going to read this out just in case it's being recorded, because they won't see your chat. Cable is often wild. Does she follow technical aspects as you expect? Yes, but not. The trouble is with cable, you are correct. You have to, in technical analysis, you really have to wait until candles close, and you can get some beastly moves in cable before the candle closes. So it can be quite a wild ride, but you can also get some very decent moves. That this morning was the move before the figures came out. Okay, we had some figures at 9:30. It makes me think that there was a leak. The figures were worse than expected. Cable actually ended up retracing. They do say sell the rumour, buy the fact. Okay, and it's always something to bear in mind. If you see an aggressive move before some figures, do be wary. Okay, so I use limit orders because being a retail trader, I face change and manage to work. Staying at charts often to find a missed great setup. No, I don't use limit orders, Nathan. I don't. Apart from doing webinars, and I don't work Mondays. I work down in London on a Monday and at home from Tuesday to Friday. So I don't really have that problem. So I like to watch price action as it evolves. So I have a tendency not to use limit orders. What's the smallest? It depends on the reward. I think sometimes people get that mixed up. What you should always be saying to yourself is how much of my capital am I willing to risk? So if your stop is 20 pips and you've got a £10,000 account, you want to risk 20%, 2%, 20%, 2% of your capital, then obviously your trade size should reflect that. Your trade size or your pips should always be relevant to where you think the stock should be. Okay, it then becomes down to money management, and that's how much you actually put on. As long as you've got decent risk reward, then it's more down to the amount of money you put on per pip, not in the actual amount of pips that you're willing to sacrifice, if you like. I don't believe in just trading £1 a point, £5 a point, £10 a point, whatever your risk appetite is. It should be more of a case of I'm looking for 200 points on this trade. I've got a risk of 50 pips, say. I only want to lose maximum £50 or €50. So I'm going to put on a €1 per pip. Okay. Let's do something else. Euro dollar. Okay, I'm going to take these Elliott wave counts off at the moment. I think they're a bit confusing. Monthlies. Okay, what do we have? What we have, quite clearly, is a channel. Okay, this last move up could potentially be seen in 5 waves or 3 waves. Okay, so that doesn't give us any indication. What we are in is a large channel formation, so it has room to maneuver to the upside. Notice that it's always made lower lows and lower highs. Okay, so if that changes now, then obviously a break of this upper level could be extremely aggressive bullish bias for euro dollar. Now you might think, well, that's crazy. I was going to swear them, but all the things that are happening in Europe, how can you be bullish on euro dollar? But if you actually think about what has been happening, and this currency pair has still been able to hold on to quite an extreme fundamental turmoil, it shows how resilient the euro is really. So getting back to this, acute monthly reversal candle off the top. Okay, is there any pattern in here that should give us any sort of warning signals? Well, we've got 2 inside bars. Okay, so this was a bullish candle in February, March and April have both been inside. What we have got though, we've got two price rejections. So this is sort of indicating that buyers are emerging to try and take this pair higher. If she does break higher, then obviously 132. Yeah, it's an inside hammer though, which isn't great. You want to see a hammer at the bottom or a hanging man at the top. Inside, it doesn't really give you too much bias. The bias here, for me, is there is no bias. Okay, we've got an inside bar. Okay, we're still under the 50, so bias is on, as far as the RSI is concerned, is slightly to the downside. We've got an engulfing off the top. We haven't got a reversal pattern in here, so you need to then start breaking down through time frames. So just keeping that, and I'm above my moving averages as well, so I know there's sort of resistance to the upside. And then we start breaking it down into time frames. Isn't there a support level where, I'll flick this, there's a support level here. Yes, definitely where the pin bars are finished. There's also a resistance level here to the top side. Again, it's technical analysis. Everybody will see different things in the charts. If we don't see different things in the charts, then we'll all be making heap loads of money and they would only go in one direction. So again, it's just my opinion. I do make money, so I think my opinions are okay as far as I'm concerned, but people will have conflicting views. And a lot of the time in analysis as well, we do get conflicting chart patterns. Okay, so you've just got to open your mind up to what can happen, what is happening, and try to get a good read on it. Now, what we did have was, again, 5-wave move down. We had this actually morning star formation, move back up, inside bar, move back down, blah, 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 blah. 2 weeks ago, a bullish outside candle, okay, on the 16th of April. So that did give us a short-term bias. One thing I should say about bullish and bearish outside bars is that a lot of the time, a good entry level, you want to sort of, I don't believe, especially in larger time frames, of just pulling the trigger and throwing yourself wholeheartedly into a trade and putting all your, don't know how much you're looking to trade, but all your cards in, or you've gone all in at poker because you've seen this reversal bar. What I have a tendency to do is advise that you trade a bit more like a bank trader. A bank trader will build a position, so we'll build see something that he likes, fancies it higher, or she buys so much. If it moves a bit lower, buys a little bit more. So they'll build, improve averages. Okay, yes, I do. Look at Confluence, and again, severe lack of sleep, and I've forgotten what I was talking about. Marabuzos. Okay, note Marabuzo lines. They are a very good indication of support and resistance. Again, we're getting back to like 50, 61.8, these prime areas. A Marabuzo line is 50% of the open and the close of your Marabuzo. Okay, so let's just show you some here. Okay, that is about, I'm not going to do an exact calculation, that is about a Marabuzo line off this candle formation. Okay, and that is again about a Marabuzo line off that candle formation. So you've got these sort of support and resistance levels. So even though we've got a bullish outside bar, it does come down to give you, or give us, a better entry level. I'm still not convinced. I might be very stubborn here, that this pair is going higher. Okay, what we've got, with 5 waves down, okay, 1, 2, 3, so that, I think that we can safely say is wave A, okay. Then a wave down, a 3-wave sequence down, 1, 2, 3. AB should equal CD, okay. It has done enough to warrant. Okay, just got lower. So I mean, the low here was 03. The low here I think was 95. Yeah, 95. So it got 8 pips lower. So as far as wave patterns are concerned, that was enough. But I think we've got a larger correction cycle. So I think 1, 2, 3, and then this choppy 1, 2, 3, and then 1, 2, 3 down towards this sort of level. And the reason that I'm extremely wary to be buying really past 130.30 okay, is this, which is a descending triangle formation, okay, that has a bias to break to the downside. We've got here, beast. Okay, we've got RSI making lower lows. At the moment, she's on the buy side. We did have a breakout, we did have a retest, and now we've moved higher again. But I'll show you a different. Just let me know if this chart, you can see this chart. Because, okay, do I need to refresh cam, or is that just purely an Ishimoku cloud? Can you see that, guy? Sometimes that's the. Yeah, okay. So this is, what I said about keeping Ishimoku with all your lines on a different page. This is exactly what I've done here. Okay. Now, zoom out a bit. CQG doesn't like all this recording system doesn't like it when you mess about this too much. Sorry about this. Okay. Now, what happened when we broke out? Okay, this is the turning line, this gold line here, and this line here is called the lagging, not the lagging line. We've got Tenkan Sen and Kyujin Sen. Tenkan Sen is the turning line, which is closest, and the Kyujin Sen, basically they work like moving averages, and this gold one should be one of the Zen lines. This gold Zen line should be above the pink Zen line. Otherwise, it's a false breakout. Okay, so this is indicating that this move up is not a correct breakout. I know we had a decent retest, I know we pushed higher, but it's saying that we can potentially move back into the cloud. Okay, we haven't got any reversal patterns as yet. What else can I tell you about this Ishi? And of course, this is your lagging line, this green line here. And I do hope you can see it. And this is mixed up in price action. Okay, what is supposed to happen is supposed to get a clear break above price action 26 periods before. So this is chopping around a fair bit in here, and I personally am unsure of whether this upside momentum, I hope you can see that again, I'll just click off and click back on just in case, can continue. So we've got a trend line, we've got a false breakout, okay, and we've got support around 130.30. So again, back into short time frames. This looks a mess, to be honest. This chart action, I know it's higher highs and higher lows, but it's not pretty. Is it a 5-wave pattern? I suppose we could say 1, 2, 3, 4, overlap up in 5. What else do we have? Okay, we're getting towards a trend resistance. It's a relevant trend resistance. It has held. And it's not a UK holiday today. Otherwise, I won't be sunning myself because it's peeing down the rain outside, but I'll be doing something else. I wouldn't be on the golf course either. Five bars close above Kumo should be a real breakout. D1 euro. If that's the way you trade it, that's fine, mate. It's not the way that I look to Ishimoku. And plus, I wouldn't want to wait 5 bars either. So it's everybody's their own. Like I said, technical analysis isn't a written science. It's how everybody interprets their charts. I'm not saying at all that your analysis is wrong, and if that is something that happens more often than not, then it's a great shout. I just haven't heard that one before. Okay, what have we got here? For me, we've got an ending wedge formation. Okay, so we've got an ending wedge formation. We've got a weekly trend line, and we've got an inside 4-hour bar at the moment. She acted very well as support here as well. Okay, inside bar, and she's moved up. I don't think she will take the high again. I could be wrong. If she does break this level, if she does break one, is it coming in at now at 132.85, and it would look to me that that's a critical point at the moment. If it breaks this level, then it should be moving higher. Okay, towards 50%, towards the cloud cover, which is 137.85. Okay. If she rejects this level and we get a decent reversal pattern, then I think she comes lower. She won't take these lows here. I think she chops around, comes a bit lower, and then we get the move up. So I am long-term bullish. I'll just be very wary about buying in around this level at the moment. Okay. We've got time for one more. Dollar yen. Okay, monthly, bullish outside bar. Last month, again, doesn't give us too much of an indication. No problem. Vicky's just saying we've got 2 minutes left. Weekly, inside bar. Okay, inside a army bar. I wasn't too fanatic about these extension levels. Okay, because it didn't falter, okay, around here. But what I am concerned about, trend, damn, okay, is here. So we've got a previous area of support, so support, support, then becomes resistance, resistance, should now become support, okay. Wouldn't say, could we see a head and shoulders formation coming in here? Well, it'd have to move lower if it was. So bearish outside bar, weeklies, okay, we've come a little bit lower. We did call a sell trade in this one this week, but a cautious sell. So this is this area, okay. Now again, breaking down, we have to be quick with this one. 1, 2, 3, 4, down in 5. Now fifth waves don't have to get to 261.8%. So this is when this area, this fifth wave, is when you've got to start breaking down into short time frames. Just notice this at 61.8% as well. Inside Arami, move back up. Messy price action. 240 minutes. Okay, so this is the start of our fifth wave. Okay. Pause at 61.8% overnight. Inside bar. Didn't break to the upside, broke to the downside. This is now looking overextended. I'll be surprised, it could do, but I'll be surprised if it gets through 79.54, and then we're looking for a decent move back up again. Back in there. Okay, back into the cloud. Any questions before we wrap it up? Somebody must have a question shortly. No? Okay, guys. Well, I hope you've enjoyed it. I hope it's been beneficial. And good luck with your trading. Okay, thanks very much. I'll see you soon.